ladies and gentlemen, you I'm sure know him already, but you probably got to know him a little bit yesterday with his impromptu panel joined. Sorry for doing that, but
absolutely,
you did great.
That was
fine. This is Michael Terpin. He is really a true crypto OG, early investor, early advocate, early prophet, and has not let up for years and years and years. It just has been very responsible, I say, for forming the industry. And I'd like you to introduce yourself and your new book, and we'll go from there.
Sure thing. So yeah, CNBC called me the godfather of crypto because I was involved in so many early projects. I first started playing around with Bitcoin in 2012 and then dived in headfirst when I went to the Bitcoin Foundation conference in San Jose in early 2013 and just saw that this was going to change the world. But traditional investors oftentimes did not get it. They didn't even want to read the white paper. They would ask their accountant, their stockbroker, and they'd say, oh, they said it's a scam. And I talk about this in the book, Bitcoin Supercycle, distributed by Simon & Schuster, available on Amazon, and I have a few copies at my booth in the back. And basically, I spoke to the New York Angels, prestigious group that I'm very familiar with. Been there a number of times looking at startup investments. In summer of 2013, when the price of Bitcoin was $66, and I basically said, this is going to be, 100x opportunity. It's, poised to take over the world of finance. Went through the basics in about 10 minutes, and nobody in the room, there's 100 investors, bought $1 worth of Bitcoin. In fact, my only comment was at the break, this elderly gentleman comes and says, son, I'm a retired economics professor at Princeton. I looked at this Bitcoin. It's only used for drugs and prostitution. I suggest you run away as fast as you can before you're arrested.
But what were the downsides? I'm just kidding. Okay, go ahead.
Yeah, and of course, at the end of the decade, they asked the New York Angels what their biggest regret was not investing, and so you can imagine what they voted on, because $66 is now $107,000, so pretty good return. And so this book is not Bitcoin for dummies, it's Bitcoin for misinformed investors, because it frustrated me that really smart investors who were investing in real estate, investing in stocks and bonds, trying to have a diversified portfolio, would have 0% in Bitcoin. And literally, if you put $25,000 in Bitcoin at the first halving, end of 2012, and didn't do anything but sit on it, today it is worth $215 million. Now, if you also followed the 4 seasons of Bitcoin approach that I discussed in my book, where you hold Bitcoin for 3 years and cash for 1, not including taxes in here. I live in Puerto Rico, so I don't have to pay them on capital gains, and I know there's some folks from Dubai and other places that don't have to worry about it, but just without regarding taxes, if you were holding Bitcoin for 3 years and then holding cash for 1 and getting in and out within about 20% of the highs and the lows, that $25,000 would be worth $12 billion today. Yeah, and because you'd have about 60,000 Bitcoin by buying and selling. That's the strategy that I explain in the book.
Where were you when I was just a young 45 years old?
Talking to Bitcoin about you. And actually, we had early chats about the regulatory, and
Yeah, that was before I put some of my money where my mouth was, but it wasn't quite that early. So amazing. So writing a book is a huge commitment, and you're a very busy guy, and it's interesting how you just positioned that, because I interviewed you about this a while back for the YouTube channel. But it's kind of interesting that you would still have to convince investors to get involved. And I feel like the tone's changed somewhat with the Trump administration and BlackRock and the rest of them getting in. What's the atmosphere like now? Sorry, let me ask a little bit more detailed. What was that? You obviously were prompted to write the book based on the thing you came up with, and then you spent time writing the book. What was the attitude at inception? What's it evolved, and what is it now? That's probably what I want to ask.
Sure. So I'd say right now, the narrative of the same people I was telling to buy Bitcoin at 100, 1,000, 10,000, now it's like, well, it's too late. And, and it's like, it's not too late. I mean, Bitcoin is 33 cycles before they mine the last Bitcoin, and it'll still be around and very established after that. We're now in cycle 5. But the way that Satoshi envisioned this when he created the blockchain By the way, anybody who listened to the question yesterday, Satoshi did create the word blockchain. The paper that was referenced to the blockchain was for timestamp server. It was not called blockchain. It was just a technology that evolved into what Satoshi invented, which is the blockchain.
You went and looked that up after the conversation to make sure,
I knew
right?
it, but I looked it up anyway and just looked at the reference points and looked at the original documents. They call it timestamp server. And so, therefore, they're referred to by some people as the fathers of the blockchain because they had, prior art in one area of timestamping servers, just as David Chaum, my friend, who I'm working with on some projects now, is called the father of cryptocurrency because he literally 10 years earlier in the early 80s as a PhD thesis at Berkeley came up with the word cryptocurrency, came up with about 90% of what was in the white paper in terms of just the way that you could go and make. There was a group of people called the cypherpunks. I have a whole chapter in there. And they were trying to figure out, how can we use math to create freedom? We want to be able to make internet money. And literally, they were talking about in the 80s and then the 90s. And David came up with a really closed system. All that was missing was he did not have the decentralized aspect. He had the hashing. He had the time servers. He had all sorts of things like that. But for consensus, he went to IBM and had them act as the referee. And they shut it down.
Interesting. Bitcoin, just like you're the godfather of crypto, Bitcoin, you can say, is the godfather of cryptocurrencies. And it's been forked and played with, and you got this and you got that. Time's passed, and I love it, but I questioned whether its original format is going to take us forward the next 10, 20, 30 years. Sorry, especially with quantum. So I'd love to get your point of view.
First of all, quantum is, in my opinion, the Y2K bug of this generation. It is right now. It'll take theoretically 20,000 qubits to break Bitcoin. We're at 15, not 15,000, 15. And who's developing it? Google, Microsoft, all these big companies.
China.
Right. You think they're going to go out and say, we're going to go in with multi-million-dollar, billion-dollar in some case investments, and our first use case is going to be breaking Bitcoin? Certainly ain't going to happen in the U.S. And the thing is, as soon as it starts getting close, you ever hear of a SegWit?
Yeah, of course.
Okay. That was basically when there was a threat to Bitcoin that the fees got too high. Well, they got the miners together, and Bitcoin is a very slow consensus. It took 2 years for them to agree to go and change the size of the block. All of a sudden, the block wars are over. Now, all of a sudden, the fees are more like $1 instead of $20, and sometimes as low as 20 cents. And so these things are fixable either by consensus of the miners, or there's also, I'm working with this with David Chaum. He believes he has a solution just on a wallet basis. And first of all, if SHA-256 is broken, Bitcoin's not your only problem. It breaks every bank system. It breaks hospital systems. I mean, the world. Cloud computing is basically, secured by SHA-256 for the most part.
Sure, but at least in the case of banking, there's human governance involved. Let me tease it out a little bit.
Okay.
Let me try to Iron Man it or Steel Man it a little bit, and then show I'm a straw man. All right. So I'm concerned that people are a little bit too casual about the challenge that quantum represents. Even if people aren't developing it specifically to break Bitcoin, that may be one of the side effects of it. So it doesn't have to be their first desired use of it. It could be something else, like they just want to be able to hack into DoD communications. But it may be a side effect that they can break into Bitcoin. Also, when SegWit was being handled, there was a little bit more centralization, I feel, in the Bitcoin community, or a little bit more of a consensus. Hardly. Okay.
It took 2 years because you had the miners who actually kind of wanted to keep the fees high. And then you had the developers who basically said, this can't be sustainable. And that's when you ended up having the fork to Bitcoin Cash.
Okay, fair enough. Now, the original white paper that you reference is, I think it's peer-to-peer digital cash.
That's correct.
It's certainly become a store of value. It's certainly become a valuable asset.
I've been quoted as saying, and I believe this, and I, by the way, have the entire white paper, which is only 9 pages, in the book. It's chapter 5, and I annotate it so people can understand it. Some people look at it and get scared off by the middle of it has some math formulas. That's just to show off to cryptographers that this is real stuff. But if you read the first couple of paragraphs and the last couple of paragraphs, it basically describes the innovation and the vision of what's become the entire crypto industry, with Bitcoin still being 2/3 of it. So I would say that Satoshi failed in his original vision to have Bitcoin as peer-to-peer cash, but enabled stablecoins. There would have been no stablecoins without the blockchain, no blockchain without Bitcoin. And so you end up like starting something. It's my next book is called Pandora's Blocks. So you end up,
nice.
yeah, you end up starting something that you have an idea of what it can do. You have a vision, but reality takes it sometimes in other directions. And I think it has become an incredible store of value. And a store of value doesn't mean that it's not going to go up and down on a daily basis. I mean, yes, you'll have days that it goes up 15%, days it can go down 10%. That is evened out over time. I'd say right now it's no more volatile than Tesla or Amazon or Facebook stock if you look at the year high and year low most years. But the thing is that every 4 years it has gone up. And it will continue to, I mean, Satoshi mentions this in the white paper, as long as there are more people using Bitcoin than the prior 4-year cycle, and that is more than the new Bitcoin on the market, the price has to go up. It just doesn't go up in a straight line. And that's where human fear and greed comes in. And human fear and greed is what causes what I call the 4 seasons of Bitcoin. Within every 4-year cycle, you have 4 distinct periods. Bitcoin spring, which starts on the day of the halving, that's when 2 simultaneous things happen, one bearish, one bullish. You end up having new scarcity. So people say, oh, there's less Bitcoin, the price has to go up. But the miners are losing money because they were on average maybe 20% profitable. Now it's under 30% loss. So it stays flat for about 4 to 6 months. And then eventually the scarcity takes over. The difficulty adjusts because that's something that's algorithmically programmed for the miners. The miners trade out and get new machines. And the day that you hit the prior all-time high from the last cycle, this is 4 out of 4, goes up like a rocket ship. And that happened on November 5th this time. You know, it was flat for 6 months. And then all of a sudden, the 7th-month, November 5th, which was Election Day, it went and beat the prior all-time high from the last cycle, 73,850. Within 3 weeks, it was over 100,000. And typically, that ends up going about 9 to 11 months. It could go a year this time. And I project we'll be over 200,000 by the end of this year.
Really? Over 200? We're kind of out of time. I want to ask you, I'm going to just abuse my privileges here. The quote-unquote 12-day war, conveniently, you know, Bitcoin dropped for a heartbeat, and now it's back at 106, 107.
107, yeah.
Yeah, is it counter-cyclical? Is it, is it a flight to safety? Is it decorrelated? What's going on here?
It's been historically 65% uncorrelated with the NASDAQ. Over time, you're going to see that it's more and more uncorrelated because it basically is the alternative to fiat debasement. And so certainly there's some shocks. I mean, look, the Japanese yen trade tanked Bitcoin down to 49,000. That was a huge buying opportunity. Whenever there's a dip in a bull market, you want to be buying. And the bear market is different, right? That's when the bubble pops at the top of Bitcoin summers when you start Bitcoin fall. That's been almost exactly 1 year from the frothy top when retail is running out and doing the wrong thing, they're buying high and they panic sell low. You need to do the opposite. And it's been last cycle, November 10th of 2021 was the high, and then 1 year later was FTX. And these things are predictable. These are predictable because people get over leveraged during the bull market, and that's when all of a sudden, as Warren Buffett says, I mentioned this in the book, it's only when the tide goes out you can see who doesn't have any clothes. And that's when you have bankruptcies because the people who played too much with leverage during the bull get trapped. But the media doesn't pick this up. They say, oh, Bitcoin's dead. You get out of Bitcoin.
Again.
The anti-Kramer, right?
Yeah, exactly. All right. We've gone over, but you're fantastic, so I just want to kind of run with it a little bit. Thank you so much, Michael Terpin.
Okay.
I think you're here with your book, and
I'm here with the book, and I'm also developing a fund based on this book. So anybody wants to ask me about that from family offices for credit investors, and I've also been consulting to some of these Bitcoin treasury companies because they need to not just buy; they need to know when to hedge.
Everyone get that family office. Talk to Michael Terpin about this fund and his strategy. Yes?